Good morning. Good morning, good morning, good morning. Monday, September 12th. How's everybody doing? Hopefully all you guys had a great weekend. Great weekend. It's feeling a little funky. Really dreary weekend around where I'm at. But nonetheless, it's a new week, so we're here to hit it hard. Doesn't matter what the weather's doing. Doesn't really matter what we feel like. The market's there. The market's going to move, and we've got to buckle up, strap in, get to business. So here we go. What do we have on the economic calendar this week? We know it's a very, very interesting early part of the week since we get CPI tomorrow morning, 8:30, and Wednesday, the next day, PPI. Same thing, 8:30. So two really, really, really important economic data points will be coming out here in the next 2 days. And I think that, the market's kind of the expectation that, all right, maybe inflation's ticking lower, but we still know that Jerome Powell wants to be aggressive with his rate hikes, and we're on the table for 75 basis points again. So we're not out of the woods from that perspective. And as I kind of voiced in my video this week, came out yesterday morning, I think all of the risk is to the downside. Even if these numbers come in fine, no problem. Inflation is ticking lower, which the forecasts are showing, right? Negative here, negative here. So even if those do come in negative, I think that the market still gets its 75 basis point rate hike based on the aggressive stance that Jerome Powell has been taking, a little bit more hawkish than dovish recently, and that's that. So even if the numbers are good, we still get the rate hike. The market does what it'll do. If these miss, then again, all of the risk is in the downside. If inflation does not continue to progress to the downside, if inflation does continue to tick higher, then you better bet we're getting more of these in the future. So that's what we'll see there. I wrote DF and then plant-based, then it switched. I don't know what that means from Rago, but good morning to you guys. So anyways, that's what we've got on the docket for economic data. Those are really the two important early week things that will be happening here. Everybody should be watching out for that. Do not be surprised if the market sees some volatility on Tuesday and Wednesday. That should not, you should not be caught off guard by any big move that happens on Tuesday or Wednesday. Okay, do not be caught off guard by that. So that's what we've got on the economic calendar. Really, after that, it's all the standard stuff. Retail sales will come out, manufacturing, unemployment, consumer sentiment. That's probably a decent one to watch out for Friday morning at 10 o'clock. Obviously, we've got some time before it's Friday. It's only Monday. It is not a shortened holiday week this week. So there's some time to go before we get there, but that's what we've got on the docket. Please do not be surprised here. Please do not be surprised here. All right? That's that. Any stock-specific headlines? We're going to speed up through this section. It seems as though many people, they don't really care so much for the early part. They would prefer to get through the core list of companies, through all the levels. So what we'll do is just, high-level stuff. Goldman, Apple Card business problem. Okay? Interesting. Next up, Google spins out secret high-speed telecom project called... Jeez, I didn't even have a waffle this morning. Excuse me. I didn't even have a waffle this morning. You guys know what happened last Friday, right? But no waffle this morning, and the voice is still waking up. There we go. Are we in business? Check 1, 2. Good. All right, Google spins out this Jesus, man. It really is a Monday. Google spins out a secret high-speed telecom project. So interesting. Positive headline around Google. Dow futures rise as Wall Street looks to stay ahead of key inflation data. So bullish headline again. Bill payments stock, Bill.com is a buy and can rally 30% from Morgan Stanley. So there's an upgrade out there. Twitter calls Elon Musk's third attempt to scrap acquisition invalid ahead of the key shareholder vote. So Twitter's been a really weird one to watch recently, but something just to sort of keep in mind. Ford expands the hands-free driving system. JP Morgan acquires Renovite to help it battle Stripe and Block. So digital payments are obviously the future, and JP Morgan trying to get into that space. Bitcoin finally making the move up and over 22K, but not out of the woods yet, as we voiced on the Saturday video. What else do we have here? Stock-specific stuff. Sell overvalued Roblox. So a negative headline out there compared to what we saw earlier, a couple of positive upgrades. Walmart, Amazon, and Target are spending billions in a slowing economy. I don't know. Is that ad rates or is that tech upgrades? We're not going to read the article, but interesting. What else do we have here? The ECB, Europe Central Bank, has more rate hikes in store, officials say, but don't expect another whopper. I wouldn't hold my breath. I would wait and see what CPI has to say early this week and then go from there. What else do we have? Gold miners expected to jump 20% based on Goldman's expectation. Interesting. Disneyland, nope. Okay, good. So anyways, just to keep it very brief and stock specific, Goldman has quite a few upgrades out there, one downgrade, and Google has an interesting spinoff coming. So I would say pretty neutral based on some headlines, just in case you were interested in trading some stock specific stuff. Anyways, here's the earnings calendar. What do we have? Monday after the close, we're only paying attention to Oracle, really. Nothing else really catches my eye in this lineup. Not interested. So Oracle, yes. If I could get the tool correct, there we go. Oracle is a yes. Anything else here? Nope. Nothing on Tuesday. Nothing on Wednesday. IronNet, maybe. That had some interesting moves, momentum moves, probably earlier in the year. Last December, January, February, that kind of time frame. So maybe if you want to watch IronNet, might be a popcorn thing. And then Adobe after the close on Thursday. That's really it for stocks to watch for earnings this week. So Oracle, maybe IronNet, and Adobe. That's where I would keep my attention. Other than that, nothing big going on from the earnings perspective. So that's going to wrap that up, and let's get right into our ES futures. What is going on over on the screen here? Today is contract roll day. So for anyone who's trading the ES, make sure that you've changed your contract from the U contract to the Z contract. The Z contract is now the front month. If you are using the continuous contract here on Thinkorswim and you're just, typing in /ES, then what you need to do is you need to go to your little gear settings icon right here. Click on that. Go to where it says futures in the top bar right here. Click on futures and make sure that you have checked adjust for contract changes. Adjust for contract changes. If you don't have this checked, let me show you what happens briefly. So if we go to the ES, this is the continuous. What do we want? What are we doing? We're zooming in. I do have it checked off currently. Notice where we're opening. Kind of right in range, right? Here's the prior day's high. We're opening right around it. If you do not have, adjust for contract change turned on, look what happens. If we turn that off and press OK, now all of a sudden it looks like we're opening on a massive gap up because this is the old contract pricing and this is the new contract pricing. Not good. Not good. So if you are using the continuous, the ES, no extension, no contract specification after in your search bar, please make sure that you have, under the futures tab, adjust for contract changes turned on. When I do that, now you'll notice this is much more appropriate in terms of contract pricing. If I go over to the ESZ22 now, notice our last trade price here, 4101.25. Over here, 4101.25, okay? So that's what we've got there. This is, ultimately, this is obviously a little bit different than that continuous contract because the continuous contract is using the U contract in here and then adjusting the current, right? So this is slightly different. I would say if you're looking for the most accurate thing, just use the Z. Be contract specific. Tell the platform exactly what you want. That way there's no questions, okay? So anyways, that's the quick rant on contract rolling. Today is the day where there's more volume in the what is now the current month than what was the old front month, the U month, okay? So if you look at the 815 bar here, 9,535 contracts, 815, 9,535 contracts. If we go over to the U contract, look at your 815 bar, 5,345 contracts, so not even close. Right? Not even close. So you definitely want to roll in your ES. There's no point in really trading the old contract at this point in time. So here we go. ES Z22 is what you want. Z22. Let me take a quick peek through the chat, see who is here with us this morning. Then we're going to get into the three questions, of course. We've got question 1, 2, and question 3 on the horizon. We'll get into those in just a second. But who's up first in the chat? We've got Plant-Based Will. Plant-Based Will, you got one more day to go, and then you win. You technically win our little giveaway here, $50 PayPal or a t-shirt in size small, large, or double XL of your choosing. So I'll put TS here. You've got one more day to go, Plant-Based Will. Can you do it? Let's see. Tomorrow is ultimately the deciding factor. If someone can sneak in here before plant-based will, it will reset the streak. If not, then again, that's that. And we're going to wrap up this little challenge we've had going on in the chat. Anyways, after that, who do we have here in the chat with us? Rago, Javier, we've got Alex, Random Factor, Nick Farrell, Andres Mendez, Reg Pull, Jerome, Ian, Tim, Scalp Daddy Dollars, Ida, Raz is here. Good morning. Raz, you going to do it? You going to knock him off the throne? I know you were here first a couple of times in a row. M. Spears, good morning to you. 2 bricks per week. Nancy, Newell, Ryan Speed, INF the based homie, Jason Lee, Ross Muir, Stevie J, John, we've got Live Better, Sassoon, A. Ramus, Thunder, Swipe, Buckminster Wallace, Soldier Down, Kuda, DC, Vincent, Clint, Roger Tutt, Commando is in the building, M. Power, Disaster Tank, Wade, Johnny, Siege, Mark, Peter, the list goes on and on and on. Gregory Rulo, good morning to you, sir. It's on and on and on. Anyways, all right, that's gonna do it for member shoutouts. But I hope everyone's had a great weekend. And again, we're here to hit it hard here this morning. No waffles this morning, Steven. Yeah, no waffles. But yeah, maybe we can just blame and carry forward the one from Friday. So interesting. All right, cool. Here we go. That's it. 3 questions. If you don't mind, hit the thumbs up button. It looks like we've got some people asking for that in the chat, so I'll just reiterate their sentiments. Anyways, 3 questions. Here we go. Question number 1, where are we opening in relationship to the prior day's range? We're currently opening slightly above the prior day's range, so that does mean a true gap higher here in the ES. So I'll put a nice up arrow here on question number 1. That is a bullish takeaway, and it does mean that there's the possibility for a shock and awe open here this morning. Question number 2, where are we opening in relationship to the overnight range? Here's your overnight high. Whoop, there it is. There's your overnight low. Currently more towards the midpoint, maybe the lower edge of the upper third. I wouldn't be as bullish as if we were opening, somewhere up here north of 4110. So overall, I'll put one of these. It's a tilde with a slight up arrow, just noting that, it's not bearish. We're certainly not opening down here, and we're a little bit better than the midpoint of the overnight range. So there we go, tilde. Question number 3, last but not least, where is the overnight inventory? Is it net long, net short? To do that, you just extrapolate the settlement price from the prior day's session. That's the same thing as saying the close, C for close. You'll notice that we had very little activity under the overnight low. We kind of gap up on the Sunday night open, right? Fade a little bit, but look at this. Basically, 95% net long. Very, very little activity underneath the settling price from Friday. So based on that, I would say 95% net long. This does mean that we have the possibility for a shock and awe open and some gap filling to take place on the open. Question number 2 is where we have some slight concerns about the gap fill setup just because we're not opening smack on the overnight high. So is our risk reward aligned? Not entirely. So what do I mean by that? Let's clean this up and walk through it together. So the gap fill scenario is usually this. You open here, you look for a failure of the overnight high to get acceptance above, right? And then you look for a short through the opening print to close the gap, meaning your target is the prior high of day. Does that make sense if we were to use the overnight high, right? Are we going to wait for something like this and then use a stop up here, targets here? I mean, this doesn't make sense, right? Your risk is much larger than your reward. Does not make sense as a trade idea. So to adjust a little bit, something that I would say is reasonable is if you are intent on trading the short side for the gap fill, some inventory correction, then what you need to see happen is a very, very minor pop in the morning, something that is significantly below the overnight high. Then look for short through the open and make sure your risk reward is aligned from this perspective, right? So if we get something that does this, here's your stop, there's your entry, there's your target. That's really, really pushing it. There's not a whole lot of range to be working with here to the downside, considering we're not opening at that overnight high. So it's a really, really tough trade to pull off on the gap fill here this morning. I would be mindful of that. It doesn't mean that the inventory correction won't take place. That's not what I'm saying. But from a risk-reward standpoint and actually executing the trade, it's a little difficult, as you can see, based on the shaky nature of the amount of reward that's on the table as our first target, prior high of day, right? So if that doesn't make sense for you, if you're not quick draw McGee on the open, if you're not going to take a 2-minute scalp on the pattern that could potentially let that unfold, then what's the next best thing that we can watch out for here this morning? Well, I would say it's the gap fill reversal, right? Because this gap is of reasonable size, it's only about 5, 6, 7 points maybe as of right now, depending on where exactly we open in this kind of range here. Because it's a reasonable size gap, if we fill the gap and reverse off of it, okay, bulls are in control, right? Buyers stepping up, closing the structure, sellers exit when they need to exit, and the buyers are back in control. So what are the entries for a gap fill reversal? Let's discuss those now. Number one, the most aggressive would be right at the prior high of day, of course. So you're watching out for any hammer candles that form down here, any sort of intraday double bottoms off of that level. It could be a fake break, something that does this, inverted head and shoulders, right? So prior high of day, very, very important pivot on a day like today, on an open like this. So I would be watching that like a hawk. Any sort of reversal patterns around that prior high of day does strike me as bullish, looking for the reversal back higher. If you're not comfortable looking for the move here, and of course on any of those patterns, right, stop loss just goes here on the other side, hammer candle prints, stop loss goes here right on the other side, right? So tight risk reward, and your target ultimately will be the overnight high on the reversal. But if that pattern is too aggressive for you, if that type of stance is too aggressive for you, then maybe you think about something like this. So here's the open, we fill the gap and we reverse higher. Your trade is possibly on the break of the opening print. So screens go green, that's where you look for your entry and you're targeting the overnight high. I don't know exactly what type of pattern will or if it even happens in the first place, unfold around that opening print, but that's another possible setup here, right? So gap fills, maybe it chops around in here, then we approach the open. Maybe there's something to enter here for the rotation there. Just make sure your risk reward makes sense. Make sure that there's some sort of higher low there to use as a stop loss, entry here, target here. Just make sure the math makes sense, right? At the end of the day, it's just making the math make sense. So those are two, maybe three, excuse me. Those are three scenarios in terms of trade setups here on the open based on these two levels. Now, if the market fills the gap and falls back down into the prior day's range, I think we're on tap for a choppy day as the market probably just digests and goes sideways in the value area ahead of CPI. Market's just holding its breath. It doesn't want to make a knee-jerk reaction move before CPI comes out tomorrow at 8:30. So in here, I would not personally want to get overly biased or directional. Quick scalps, 5-minute patterns, 2-minute patterns, if that's your mojo on the smaller time frame charts, all good in there. But from a larger directional standpoint, I think in the value area, the market's just trying to stay still basically before the CPI. All right, so that's what I've got for you on the ES here on the open. What we can do is, let's go to the higher time frames. Let's consult some of the higher time frames. These are going to look fairly ugly on the higher time frames because we don't have much volume from in the past, and the numbers are going to be slightly skewed. But just talking about structure, right? The main takeaway from this part of the analysis right now is just think about structure. Don't be so overly concerned with what the exact numbers are. Just think about structure, okay? So here, break and retest. We've talked about this incessantly. It did ultimately hold on the 4-hour. You can see we've got, clearly an uptrend in place. Here's your low, higher lows along the way. And obviously now you've got multiple higher highs. You took out this high, you took out this high, this high, this high. So there's no arguing that we are definitely in a new 4-hour uptrend. So structurally speaking, that falls into the bull category. Now, should you be, or maybe I should rephrase this, would it be wise to be scouting massive new money longs at the top end of this possible channel that's building out like this? My answer to that question is no. I wouldn't be overly aggressive on the longs here based on the 15-minute setups we just talked about. You can scalp those things. Those are intraday trades, but I wouldn't be looking for the ES to pull back, close the gap, break this overnight high on today's session, and just magically move to 42.50. That does seem like a stretch to me on today's session. So I'm not advocating for that, but I am saying that the 4-hour structure has shifted back to the bull side based on the trend. All right. So that's the 4-hour. Let's take a look at the hourly, see what else we can learn about the structure here. Again, I think that, it's very clear. Obviously, if you're in a 4-hour uptrend, you're very likely in an hourly uptrend. So that is true. We've just made a new higher high in the overnight session. Same thing holds true. Wouldn't necessarily be an advocate for huge new money longs up at these levels. But if we do pull back, what are we kind of watching out for? This was the whole point of the of the video this weekend. If we pull back, the deepest pullback we want to see ahead of CPI is to the gap fill area from Thursday to Friday of last week. This gap right here wants to be kind of a line in the sand if the bulls are going to remain in control. Notice I said if the bulls are going to remain in control. If we move underneath this area here, then it shifts the tone, and we will then start scouting, a lower high and possible reversal to the downside. So that number on the new contract, the Z, right? On the Z, it's going to be 40.2775. 40.2775. Let's go ahead and throw that on there, actually. 40.2750, 40.2775. Pick whichever one you like. All right. You're splitting hairs at that point, so it's not, it's not the end of the world. So we'll make that blue just so we're aware if we close the gap underneath the prior low of day. Based on where we're opening currently, that would not be my first thought. I'm not advocating that the market goes there and does something like that on today's session. We've talked about on the 15-minute chart how we're actually looking for either the quick gap fill or gap fill reversal for moves back to the overnight high, and then some digestion up around this area. So again, I'm not advocating that we go to the blue line, but this is a line in the sand for the bulls into the early part of this week. So that's your hourly time frame analysis. Currently, if you were to just look at, what's going on here in the pre-market, you could make the argument that this is a bit of a bull flag. Buyers are obviously responding to these higher prices. They like these prices. They're content up here. So we'll see what happens on the open. Just to drop it back down to the 15-minute one more time to sort of walk through this for anyone who's just joining the stream. A couple of scenarios to watch out for. We're opening on a very slight gap up. The risk reward does not make sense to fade this gap based on the overnight high. If you do want to fade it, it's got to be a very quick pop on the open, something that produces a very clear lower high, short through the open, close the gap to the prior high of day. That's your first target. Monitor for a little bit of continuation if you'd like, but I would just be cautious, noting that we're now in a new uptrend, right, that we just sort of proved on the 4-hour and 1-hour charts. When and if we get to the prior high of day, if you're not happy about taking this sort of short trade here, I'm not saying you have to take that. I'm saying that's a likely scenario based on the psychology and inventory position of the overnight session. When and if we get to the prior high of day, this is where you can look for reversals. So again, be on the lookout for any hammer candles, any double bottoms, any sort of inverted head and shoulders with a fake break underneath and higher low back above. These patterns are bullish for the rotation back into the overnight high. That's the most aggressive entry. If that doesn't float your boat either, and you're like, hey, these things are way too risky for me. We're entering what feels like right at the bottom. That's fine. Wait for a move back up through the opening print. Hopefully you've got some higher low structure or something to play off of against it, where you can place a stop loss. Screens go green, and maybe you get that break into the overnight high. That's the bull scenarios for today's session, falling back deeper into the value area from here to here, and I'm of the belief that the market's trying to sit still, go sideways ahead of the CPI print tomorrow morning at 8:30. All right, so that's where my head's at this morning. Let's see what the chat has to say. If you're bullish on today's session, so here we go. Bulls are expecting something that does this. Basically, a characteristic of the bullish outcomes today, some scenario number ones, is that we ultimately close out the day above the opening print for a green bar. It could fill the gap, it could move even a little bit lower, but ultimately, again, a defining characteristic of scenario number one is that we close above the opening print for a green bar on the day's session. So that's scenario one. Scenario number two is that you think maybe we fill the gap, we bounce around in here, we don't make the move to the overnight high, we dribble back down into the value area, and maybe we just go sideways in there, more of that limbo situation ahead of CPI. That's a scenario number two. Scenario number three, you're just an absolute bear. You think we're going right here, a lower high, right to the prior low of day, possibly lower after that. Maybe the blue line comes into play today. It's a little bit aggressive, but scenario number three overall, you're expecting. So a characteristic of scenario number three is that there is some price acceptance underneath the value area low on today's session. Okay, that's required for scenario number three. If you don't know what's going to happen on today's session, that's all right. Drop me a number 4 in the chat, and hopefully over time we can work on it and get you to the point where you have some sort of at least scenario driven bias, based on what could unfold. All right. So I'm going to type up the official poll. And as I'm doing that, I'll do my infamous mumble. We'll address the chat and we'll go from there. So oops, if I could get this thing to type. Nice. What do you think? Think with a K. We'll go 1, bullish. 2, neutral. 3, bearish. And then 4. No clue. All right, official poll is out there in the world. I'm going to scroll up and see what's going on in the chat. Everybody doing well? Let's see. Please don't cut anything out. Can I start earlier? No, I can't start earlier. I'm going to start at 8:30 and go till roughly 9:30, and an hour a day keeps the doctor away, right? So the stream is the stream. An hour of my time is a solid amount to put into a pre-market prep. I think just reprioritizing some of the things is more important. News, I mean, even myself, I feel that I just go through the news to get a grasp for what the sentiment is, kind of, but it's not like I trade based on headlines, of course. So that's that. What else do we have here? Go Birds from the Sankofa. I don't know what the birds are. Is that Eagles, as in the football team? I know football season started, so you guys know this. I'm not hiding. I'm not a big sports guy. Not a big sports guy. Maybe a little bit of hockey in the winter, but other than that, not much. Do I have any videos where I execute a trade in real time from Z3R0, which I imagine stands for zero? Yeah, you can go on the channel and just search up one lot lessons. There's a couple of live trades on there. What else? All right, so after that, there's just some responses to the poll, so let's get into it. Lots of ones flowing in early from Savior6, Hamza, Ross, Crypto Commando with the 2, Tim with the 1, 2-1 from George, Kid Ray with the 2-1. Number 1, screens go green from Scalp Daddy Dollars. Jay with the gold cash bag. Good morning to you, sir. And thinking of number 1. Okay, nice. What else? Lots of ones coming in, 1s and 2s. No straight up 3s yet. I'm looking for it. We've always got to have one. I know there's going to be one. Where is it? Scrolling. Everything looks good. 2s, 1s, 2s, 1s, 2s. Where is it? I know it's going to come. There we go. Mr. McGill is our first straight up 3. Oh, I'm sorry. Actually, I apologize. Mr. McGill is our second number 3. Joel Clark is our first number 3. So you two can hang out together. Burno the Bear even is dropping a number 1 in the chat. Incredible. Absolutely incredible. So very few are thinking number 3, but overall, I would say 1s and 2s are the dominating force on today's session. From Jay Greasy, do I use the tick chart to trade the ES? The answer is no. I use time-based charts. I have used tick charts in the past. I can't remember exactly which one I was using on the ES. I want to say 500 tick chart. And to me, I was just like, it's great. I know it's tracking the number of trades and ticks that are literally happening per bar, but it's just a little disorienting from a time perspective. So you can make the argument that trades are more important than time, and time is just this abstract concept that humans use, and it's all about the order flow and the trades that go through. You could totally make that argument, and I'm not saying there's anything wrong with that, but what I found works for me personally is just using time-based charts, keeping it simple. 5 minutes usually as low as I go. Sometimes, if I'm looking for a quick and snappy entry on a gap fill trade, I'll consult the 2-minute, but usually 5-minute chart's my go-to. So hopefully that answers that question. All right, that's the ES in a nutshell. Thank you guys for participating in the chat poll here. Greatly appreciate it as always. Let's take a quick peek at the NQs. So in the NQs, I do use the continuous contract. For anyone who missed the early morning rant on what's going on with the contract rollover, there's now more volume in what was the back month, now front month contract, which is the Z contract. So this green dashed line here represents the rollover. So we're on the NQ Z22 technically, but we're just making it easy by looking at the continuous /NQ. For anyone using this method, just looking at the continuous contract, please go to the gear icon, click on it, go to the futures tab up in the top of this box, click on futures, and check off adjust for contract changes. This is going to make the chart in front of you much more reasonable. Watch, if we uncheck adjust and press OK, notice that now we're dealing with this big discrepancy in where the value areas are, where we're technically opening. This is like now all of a sudden a massive gap up, where in reality, the truth of the matter is, if you go back to your futures, adjust for contract changes turned on, press OK, it's really not a gap up. Okay? So be aware of that, be mindful of that. Please do that if you are using the continuous contract in Thinkorswim. If you're not, again, you're probably just specifying the Z contract at this point in time because there is more volume in the December. All right, so with that out of the way, what do we have from a sort of trade setup and scenario perspective? I think everything is mostly the same as what we just discussed in the ES. However, we are not opening on a true gap. Okay, there's your prior high of day. We're underneath that as of right now. So let's just walk through the 3 questions. I suppose we'll keep it very simple. This is a very objective way to look at the market. There's no room for sideways interpretation, I'll say, for lack of a better term. So question number 1, where are we opening in relationship to the prior day's range? Obviously, we're inside, we just pointed out. There's no true gap here in the NQs, so we'll put one of these. That's technically more of a balanced indication. But we are basically right at the prior high of day, so a little bit more bullish than bearish based on that perspective. Question number 2, where are we opening in relationship to the overnight range? There it is. Basically more in the midpoint. So that's also a pretty neutral indication. Question number 3, where are we opening in relationship to the prior day's settlement, which is basically the close, half below, half above, another balanced indication. So if you're looking for more of a aggressive trade, I would probably recommend going to the ES based on the shock and awe opening outside of range. If you're looking for something a little bit more tame, the NQ is opening in balance here underneath the prior high of day. So because of that, I would be a little bit more neutral. I would look for a little bit of an opening range, right? And then we can go from there. So NQ, let's start from the higher time frames and we'll drill it down now that we know that there's not a whole lot of shock and awe here for the opening print. So again, keep in mind that these figures, actually this is the continuous contract, so it's fine. We're looking at structure, right? Obviously this is held, a little bit of bearish acceptance underneath, but that has since reversed on the 4 hour. Just like in the ES, you can clearly see the trend is now to the upside. There's no, you cannot argue that this is a downtrend. It's obviously an uptrend. We've got higher highs and higher lows. So 4 hour trend is higher. Let's see a little bit more granular on the hourly chart and see what that line in the sand is on the pullback. So here's your gap from the Thursday into Friday session. I would just look and use the round number 12,500. If we're above 12,500, all good in the NQ. Buyers are technically in control on that pullback. That to me would be an area, that's a terrible trend line. Let's just use the straight edge. That to me would be an area where would you look at that? You fill the gap, you're also running right into this trend line struck in from the lows. So to me, this is a reasonable place to be looking for, okay, can we get some sort of buy reaction at these levels? So even if the market does pull back, if the market does fall to the prior low of day, if the market does fill this downside gap here, I still think we're in an uptrend. This is a place to start to look for long entries. If we breach it, obviously that's a different story. And with CPI around the corner, that's where we don't really want to push our luck. So that's what I'm watching on the NQ higher time frames. Again, how that pairs with the 15 is obviously we're opening kind of more in the bullish territory than bearish territory. So anything that does this and holds up above the value area high, that was a really terrible double bottom, but you get the gist. Stop loss can go here. Look for rotation higher. If the ES is also pulling higher, that will be helpful. If we don't, that's not a word. If we don't, there we go, hold the value area high and we shift inside of it, that's where, again, I think the market's looking for more of a neutral hold your breath before CPI. But as we just described in the higher time frames, it can withstand doing something like this and still be bullish on the higher time frames. That's the whole reason why I bring that up on the 4 hour and the hourly chart. All right, so that's your NQ. That is your NQ. Let's take a look at the Russell. Russell's going to be the same thing in terms of the contracts. I'm not going to walk through that same thing again. Make sure that you're on the continuous with the adjust for contract changes. So RTY, no Z there, but we are looking at the Z December contract. Here we go. What do we see on the Russell? Obviously, my levels here are way off. I don't know what's going on with that. Let's try that again. So prior high of day wants to come up here. I'm not sure how I missed. Prior low of day wants to come up here, and the value area low is not the low of day. Value area low is more akin to this. This can go here. This can go here. Let's adjust that. Value area high from the Russell on Friday was up here. Reason I can say that with some kind of confidence is because if we take a look at our trade of 8, here it is. Actually, I had the Russell up last. So again, we're looking at the Z contract. You can see that defined in our upper left-hand corner. Where was your value area high? Basically the top. Where was your value area low? Right, sort of through some of that consolidation that we just pointed out here. So maybe it's even a little higher, something like that. You get the gist. Overall, that's what we've got for our Russell. Again, this is not so much a traded instrument, just kind of something to look at for a risk-on, risk-off perspective. And I would say, I would echo the sentiments of everything we discussed in the ES, in particular about the gap fill, reversal off of it. That obviously keeps us in risk-on territory, be more aggressive in the market. If we fall into the value area, chop, CPI, sideways, hold your breath, nothing impressive. All right, so that's the Russell. Let's breeze through the S&P sectors. This was another place where people mentioned, hey, maybe you could save some time by going through the sectors in a quicker manner. So let's try that today and see how you guys respond to that. Do you guys mind? Do you guys mind if we move through the sectors in a quicker fashion? Is that useful for a time save? We'll see. So here we go. XLC opening on right at the prior high of day. Overall, you want to see it stay above 55.32 on today's session. Any pullbacks that hold 55.32, bulls in control, no reason to think otherwise. Failing 55.32, bears take control. Obviously, lower high on the daily time frame and underneath this breakout point. So the one pivot I would give you is 55.32. Next up, XLY. Consumer discretionary. Clearly, big move to the upside, gap held on the Friday session, and we're above the neckline from the head and shoulders. That does strike me as a bullish takeaway, opening on a true gap up here. Be mindful of the inventory correction. You want to see the gap close. 164.50 is the number I would give you. 164.50 on the best rainbows and butterflies pullback, then a reversal for higher. That is like fantastic. Can't ask for anything better. You're obviously above the neckline of the head and shoulders as well, if that's the deepest pullback we get. If we do move slightly lower than that, 162.75 is where I would want to see it remain above, just based on the head and shoulders pattern from over here. If we can remain above that, that is optimally bullish as well. Anything deeper, line in the sand, final say, no ifs, ands, or buts about it on the daily time frame, 159 for a higher low, for the possibility of something that would look like that. That's your XLY. Next up is the XLK. Let's see what else we got here. XLK. Obviously, this one has the most work to do. It is currently opening on a very small gap up, so be mindful. Can fill that gap, but you want to watch and see if we can reverse off of it. The number, the prior high of day, 137.50. Anything underneath that, what would my line in the sand be here? Still, your rainbows and butterflies pullback is 137. So on the XLK, anything that remains above, if you're seeing prints on your little market minder window here above 137 even, I would be bullish in the tech sector. There's no reason to really think that we're, failing massively if we're above 137. So that's your number, 137, the XLK, holds above, bullish. If we get below, obviously different story, hold your breath, CPI. Next up, XLP, Consumer Staples. What's going on here? No true gap up, midpoint of the range, not over this breakout point. I would watch this to say if we can breach 74.50 roughly, maybe a breakout and some slight upward pressure comes for the S&P 500. If we're underneath that, if you don't see that level breakout, really just a neutral takeaway for the market. No need to spend any more time there. Energy sector, what's going on? Gap up, not good, over 81.4, which is really that line that we were using as a breakout point. Notice that this keeps the inventory happy in that area, sideways, choppy, balanced, whatever. Breaking that to the upside. Obviously, the bulls are back on parade. 81.04, just use 81 the whole dollar really is your number. If we're above 81, not a great takeaway for the marketplace. We know that energy is D for defensive, not ideal if we're above 81. Falling back underneath 81 is a better look for the market. Next up, Xli Industrials. Anything interesting here? Very small gap up, 7% of your S&P 500, so we're not going to read into it too much. As long as the price prints stay above 94.11, bulls are bulls are in control. So 94.11 is your number in the XLI as a pivot. XLV, perhaps worth spending some time on this one because of its importance. Second heaviest weighted sector in the S&P 500 currently. We are above, in the pre-market at least, at 130.50. That does strike me as a bullish step in the right direction. But overall, look at the room that exists here for a higher low pullback on the daily time frame. I would not use 130.50 as like your line in the sand. It's okay if the XLV falls underneath 130.50. It's not the end of the world. There's still a chance for a higher low, really anywhere above 127.15 at this point in time. So XLV, you're going to need to monitor more on an individual basis. I can't just give you numbers because this obviously would not bode well if it happens all in one day for the S&P 500. Overall, if you just want to take a very, very laid back approach, yeah, any prints that are above 127, no problems yet in the XLV. If we breach that, obviously that's a different story. This would obviously provide a lot of intraday drag if we made the move from here to here all in one day, which is why, again, you're probably going to have to monitor this one on an individual basis. Next up is real estate. What's going on in real estate? Lightweight sector, not going to read into it too much. Opening kind of right at the back test of the neckline here. I would be of the belief that this can roll over, especially with CPI on the horizon and the possibility of a rate hike. Next up is the builders, which is actually the materials sector. I know. It's the XLB. It makes sense. Why can't they just call it the builders? Anyways, lightweight sector, not going to read into it too much. Kind of more similar to the XLI. We're kind of at this level here. We're gapping up above it. Be mindful of the inventory correction. nothing here is going to make or break the S&P 500. If we're above 78.20, bullish. If we're underneath it, still bullish, but I would watch for this gap to fill underneath around 77.10. 77.10. XLF, what's going on? What's going on at XLF? Currently, very, very minor gap up. The reason we're pausing here slightly is because this is an important sector, right? Obviously, a heavier weight. I like what's going on in the pre-market, though, this consolidation. It's not really like it's trending and aggressively breaking out to the upside. It's not like the inventory is massively skewed. There's some reasonable back and forth happening here. So anything that really holds the prior high of day is like rainbows and butterfly bullish. This does look like a solid opening sort of overnight session to me so far. Breaks of your overnight shelf here around 34.50, obviously bullish to the upside, and you're targeting this high there. That is a big bullish pressure, big bullish force for the S&P 500. So 35 can be on the horizon on a hold of these sets of highs from Friday. And I like that these are also equal, right? It's going to give you a very obvious level to say if this holds, we're bullish. If it doesn't hold, we're not. So 34.41 is the number I would use. 34.41. Above that, bulls firmly in control. Even if we break down underneath, it's not the end of the world, but intraday, yes, it will provide some drag to the S&P 500. Line in the sand, 33.75 on the downside. Last but not least, XLU. Utilities opening in the midpoint of the prior day's range at the all-time highs, basically. Still D for defensive, not an ideal look. So we'll just be neutral here, but keep in the back of your mind, it's still a medium-sized red flag for the S&P 500. All right, that has been the sector rundown. I think we can now move through the core list of companies. SPY, what's going on here? I'll give you the equivalents in the SPY just in terms of numbers. Let's go clean drawing set. So your gap fill on the SPY is 407.50. 407.50 is where I would watch out for the market to come into on the inventory correction and then look for reversals out of that to move back to the overnight high. Just like in the ES, you can use a number of different entry tactics, scenario tactics at the gap fill. You can trade it here. You can trade it back up through the open for a screens go green type of scenario. That's what you're watching out for in the SPY initially. If we fall back down underneath, what did we just say that number was? 407.50. If we're underneath that, a little bit more neutral in the value area here. Hold your breath for CPI. All right, that's what we've got there. Again, we talked about this incessantly on the weekly watch list video that came out last night. It was actually yesterday morning. I was early, around 10 o'clock. But anyways, gap fills that hold there. Still bullish, ideally above 401 in your SPY. Next up is the QQQ. I was going to say IWM, but this is not the IWM. This is the QQQ. This is the NASDAQ 100. We covered this in the NQ basically, but very, very similar. Looks like this in the QQQ, the cash market is not actually opening inside the prior day's range. So a little bit more akin to what we just saw without the contract adjustment. But I'm of the belief you should adjust your contract in Thinkorswim here regardless. Be mindful of the inventory correction for lower and then a pickup, just the same exact thing that we just discussed in the ES, in the SPY. Okay, so your level, to give you that number, 307.50. 307.50, which is interesting because we just talked about SPY 407.50. But 307.50 here in the QQQ, anything that remains above it, looking for bullish setups, falling back down into the prior day's range, obviously it changes the tone just a little bit more neutral through that area for CPI. We're not going to rehash that. Same thing with IWM, more of a risk on, risk off indication here. This also, whoa, craziness on the zoom. Apologies for that. This also opening on a gap up. Boom, there you go. So this wants to hold prior high of day, which is 187.50. 187.50. The market really liking these half dollars, it appears, as we move closer to the opens here. So IWM, again, currently looking more like a risk-on indication. Looks like there are higher probabilities that we do hold the gap fill for something that looks like this, but we'll see. One step at a time, you have the numbers to watch. Let's get into the core list now. Here we go with Apple. Big gap up this morning. This is going to treat some of you very well, who I know you were saying in the weekly watch this video on Sunday that you're actually net long in Apple based on the weekly hammer candle that printed last week. So congratulations to anyone who held calls through the weekend in Apple. Nice gap up here this morning. Just like everything else, though, I would be mindful of the inventory correction. I'm not saying, you've got to manage that trade as you would manage that on your own. I'm talking from a short-term scalper's perspective. Of course, we're looking for this overly net long inventory to correct just a little bit to close the gap underneath. Again, anyone who swung Apple calls, I'm not saying bail on them just because we see the inventory correction. You need to trade based on your plan that you executed on for your entry, exit, and stop loss, okay? I'm talking about short-term analysis here. So inventory correction, yes, inside of Apple. The gap is fairly aggressive. What size is this? Just shy of about a $2 gap. Just shy of a $2 gap. Dollar, whatever that is, 70 something. So overall, this is a lucrative trade, and we're opening close enough to the overnight high where I would be watching out for this to unfold inside of Apple for the gap fill scenario. So I'm carrying that forward as a possible early morning trade in Apple when and if we close the gap to 157.83. That's again where you can watch out for reversals back to the upside for the gap fill reversal trade. If it doesn't, so here's here's something we haven't discussed really, but is still a possibility. If none of these gaps start to fill, if there's no inventory correction here on the open, again, it's telling you something that the sellers aren't there. Again, I don't think that it's wise. Maybe in Apple, it's a different story because we're just poking out of this range here. We can see some follow through. But in the SPY specifically, I don't think it's wise to be chasing new money longs at the highs. We did touch on that. But if we don't get any gap fill at all, and it does do something like that, it's just an indication that sellers are weak. Sellers are weak, okay? So carry that forward as important. So Apple, your last takeaway, I'll sum it up here. Watching for that initially, and then this after. All right, that's Apple. Next up is Netflix. Very small gap up, 234. We know that's the daily breakout level here, so I am interested in this Netflix chart as well. On the move over 234 to get to 241.25 on a day trade seems reasonable to me. So any holds of 234, bullish patterns around here, looking for excuses to get long for that daily breakout. If we close underneath 234 with more firm price acceptance in here, I would be much more neutral inside of Netflix, not really pushing your luck. Tesla up next. What's going on in Tessie? A little bit of a gap up, starting to fill though as we speak, and this is fine. Honestly, we discussed this in the weekly watch this video on Sunday, yesterday. We're coming into this rejection. I always do that. Resistance and rejection point on a pretty significant rally off of these lows. Is it reasonable to expect a higher low pullback or some sort of pullback here? Yes. Is it ideal to be chasing new money longs here? No. All right, so Tesla, I would execute some patience, or exercise some patience rather, and want to see this either consolidate for a day or two and then break out and continue. So it maybe gives us like a 3-bar play or something. So a consolidation doji. Maybe there's a quick higher low pullback. That might be a 2-day sequence. I don't know what it looks like, but I would love to see some sort of tradable pattern that defines new risk to the downside here for better longs really in Tesla to the upside. So overall for today's session, yes, gap up. Be mindful of the inventory correction. If it doesn't fill the gap at all, who knows? I mean, this thing is a momentum monster. It's proven it to us in the past, right? Through some of these rallies. Not so much of this one. I would say this is kind of on par with what we've experienced thus far. But, it can continue. There's nothing saying it can't. I'm just saying your risk reward might not be ideal at this location. All right. So that's how I'm looking at Tesla. Next up is Google. Interesting. This, of course, is based on that headline that we read in the earlier part of today's stream. Currently coming in for a gap close in the pre-market, so we're not dealing with a gap up. But what I find quite interesting about this whole situation is that in the pre-market, we clearly breached this 110.50. So again, think about this as a bear flag, a failed bear flag now. Shorts got trapped. If we can get and continue to maintain acceptance above 110.50, I can see Google making it back to basically the overnight high, that announcement high, and the structural level at 113.50. So this also strikes me as something interesting to be watching here on the open. The 110.50 break and hold above opens the door for higher 113.50. So Google also on the list. If I just had to sum it up so far, Apple, Netflix, Google, not so much Tesla, probably on my watch just based on the daily structures. Next up is Meta. Is this going to make the cut? Maybe. I would say you want to watch for an initial pullback inside of Meta because we're already fading inside the prior day's range. And if we can hold 167.25, that's where you're looking to get bullish based on the daily time frame chart, right? So initial pullback, if the market drive is lower out of the open, I would watch for this inside of Meta, 167.25. 167.25. Any reversal patterns around here, hammer candles, double bottoms, head and shoulder, inverted head and shoulders, of course. That gets interesting around 167.25. The reason we're saying this, of course, is on the daily time frame. We've got highs. This did break down. So again, trapped shorts down here. Those obviously have mostly closed out, and continuing to hold up above the top of that balance range does strike me as bullish. We talked about this in the weekly watches video, your target is the top end of the overall range. So you had a micro range inside of a bigger range, and that's going to define your target, 172.56 on the hold of 167.25. That's obviously quite a range to be trading for overhead. All right, so that's Meta. Next up is Nvidia. What's going on with Nvidia? Currently opening inside the prior day's range, but look at where we're at in relationship to this gap. It does strike me as being more promising to the bull side as opposed to bear side. In the pre-market, it's not like we rejected hard and we're getting back down into these levels, which is also a daily gap. So to me, anything that really remains, I wouldn't use the gap 143.88 anymore. I would just use 143 even. 143 even. Anything that stays above 143 even to me is like ideally bullish and, reasonable consolidation, higher lows likely forming on your, 15, 30, hourly, all that good stuff. And then you're just watching for trend continuation into the overhead gap. So 143 even is your line in the sand. If we drop back down underneath it, I would be neutral and only look for shorts through this gap as a gap trade. I would not overstay your welcome on the short side, noting what's already happened here, right? Breakout. So quick, gap fill, and then I would watch for another turnaround off of that level. So that's your Nvidia. Again, early takeaways, watch your 143. 143. I do like the acceptance that's happening closer to the highs and threatening the move through this gap. I suppose threatening has a little bit of a negative connotation, but overall, again, looking for the upside as opposed to downside first. Next up is Microsoft. What's going on in Softy? Zooming in over here. Daily, again, I thought I was pretty clear about this in the weekly watches video. I don't love any of the pattern that's unfolding here on the daily time frame chart. The one level I am interested in is 266.65, which is very close to the overnight high. Maybe there's something to do there, but if this just, does whatever, there's nothing crazy in here that I'm looking at the structure and saying, this makes sense to trade. So Microsoft, I'm not seeing it clearly. If you're seeing it clearly, by all means trade it. But for me, I'm only really interested in 266.65 on the upside. That's what I've got for you in Microsoft. I can't really advocate for something that I wouldn't do. So moving along, Amazon. We've got about 5 minutes until the bell. If you're going to tune out and prep for yourself, that's fine. Please just do me a favor and hit the thumbs up button on your way out. It goes a long way for supporting the channel and spreading the love in terms of stream recognition. Amazon, gap up here this morning. It's holding outside of this range. This does strike me as a much better structurally looking chart, if that makes sense, than Microsoft, what we just saw there. So gap fills, anything that holds 132.50 on the downside, I'd be looking for if the pullback does unfold. If we do get the gap fill correction of inventory, then I would just be watching 132.50. Anything that is a bullish pattern above that looks good for rotation back higher based on the breakout of this daily balance range right here. If we fall back down into it, again, really neutral, choppy. You could consider it a look above and fail here on the daily time frame, target the bottom end of the range. But with CPI, I wouldn't look to be overly aggressive on swings, especially earlier on, holding overnight tonight with CPI being pre-market. Especially with options, you can't adjust. Can't adjust. Once the bell rings, that's it. You're locked and loaded until at least 9:30 tomorrow morning. All right? So that's what we've got here in Amazon. Again, it does strike me as being more bullish. As long as we're looking for reversal patterns above 132.50, we're all good here. So that's Amazon. If it falls back in, again, congestion, sideways, whatever. All right, that's going to do it. We've got about 3 minutes to spare, and we'll just check back in on the ES. And because we are opening on a slight gap up, I do think I'm going to head out early so I can prep for the possible inventory correction. Yes, we are still opening on a very small gap up. So I'm going to wrap it up here. I think we did great on timing today. Which of, I don't know. You guys can let me know in the chat. Oh, big yawn. Oh, man. You guys can let me know in the chat if you appreciated the faster pace through some of those sectors, through some of the news. That way we got to everything on time, with some time to spare, I might add. But let me know. Let me know if you appreciated the pace of today, if it was too fast, if it was too slow still. I'd love to hear some feedback. If you've got thoughts after the market opens and we sit through the open here, just leave a comment on the video itself. The live chat will obviously be closed, but you can just drop a comment on the video itself. So with that being said, I appreciate you all tuning in. I wish you all a great trading day. Yeah, I'm just saying it bothers me when the poll has more results than there are likes on the video. It is what it is. It is what it is. So, all right, wrapping it up here. Again, if you're not in the Discord, join the Discord, completely free, linked down below, right at that right there. It's also in the description. And with that being said, I wish you all a green trading day.